Hello everybody, Tortoise Investing coming at you today with the community request stocks. Yun's requested, so I'm a deliver. We got two requests here we got one from Kevin Reberg 8758. Was hoping to get your input on HAS. And we got another two requests here from Tinto McGoblin or Gooblin, wondering about Texas Roadhouse and Tractor Supply. Now, if you want me to look at a stock or a holding through Qualtrim Insights and do a video on it, comment down below. You can list two or three if you'd like. I'll go through and I'll pick out from the list in another week or two, and we'll make another one of these. Hit that subscribe button. Make sure to drop a like. I greatly appreciate it. And hit that bell so you know when I do my uploads every Tuesday, every Friday, and I try to do a live stream on the weekends. Now, without further ado, let's go ahead and get into it. First one we're going to take a look at is Texas Roadhouse. This is a holding that I hold in my portfolio, and a pretty decent chunk. I think it's around 12%. Let's take a look at what we got here. Adjusted free cash flow yield of 1.95%. It has ran up, so it is a little pricey right now. Dividend yield 1.82%, a payout ratio of 48.5%. I got in around the 100s range with Texas Roadhouse personally. Anything below 100 of this, I personally like a lot. Not financial advice. Always do your own research before investing in anything, but I personally like it below 100. I look forward to, if it dips, I will absolutely add more. Take a look at the revenue. Qualtrim's been weird the last day or so. There was an update that came out, and it doesn't show the 5-year chart. But you can see here, very nice up and to the right growth. And the thing is during the dot-com bubble and the financial crisis that occurred, look at the revenue. We're trucking right along through here. Financial crisis, they still managed to grow, which is just fantastic. Free cash flow, though, a little bit of a different story. Is up and to the right, does have a nice little trend going. But they had some issues back here in the dot-com bubble and the financial crisis. But besides that, things are ticking in the right direction for this company. Again, EPS, very similar situation. Just up and to the right, beautiful. The thing I love about this company is they usually do not carry debt. They do not like debt at all. They had a little bit back here in the dot-com bubble. They had some, it looks like they took some out during the financial crisis. But if you take a look here at the quarterly, debt-free. They have paid off all their dues, and I love that. A debt-free company is a company that has freedom to, when things are bad, you're able to withstand and, not have to cut your dividend. And when it comes to their dividend, they do some very nice double-digit hikes. I love this. This is some compounding going on right here, and that's one reason why I love Texas Roadhouse so much. Share buybacks. We'll take a look here at the quarterly. They don't really do too many share buybacks. They nibble at it here and there, but nothing really all that much. And the return on capital employed very reliably in the 15, 16, 17, 18 area. Of course, they had the 2020 dip. Everything had a 2020 dip. They had to shut down. They had to close their doors. Of course, it's going to hit the bottom line hard. But right back off to the races last year. Over 17% return on capital employed. And usually market-wide averages are around 9 to 10%. So this is fantastic. I love Texas Roadhouse. Next up, Tractor Supply. It's had a bit of an up and down here the last little bit. Yeah, since 2021, it's kind of hovered in this zone within like $40 to $50. It'll be like up and down, up and down. But I like Tractor Supply. I really do. I use them quite often. We got some chickens, bunch of dogs, cats. Their services and stuff that they have are very, very nice. I really like the company. Just free cash flow yield 3.29%, so not as expensive as Texas Roadhouse. Dividend yield of 1.94% and payout ratio of 39%. Take a look at the revenue. Again, just nice little revenue stream up and to the right. Again, dot-com bubble ticking right along. Financial crisis ticking right along. The thing I like about this company, even if a recession happens, animals still got to eat. Chickens got to eat, horses got to eat. And they do a lot of sales when it comes to like farm goods. Look at the free cash flow. Again, very nice up and to the right trend here. Growing cash flow is great, and you love to see that with any company. And EPS, very similar story to the revenue. We are just trucking right along here. Debt, they don't really carry all that much debt. Let's take a look here at the quarterly. Got 1.36 billion in debt, and it looks like they are actually slowly nibbling at paying that down. And last year their EBITDA was 1.78 billion. So my rule of thumb is I don't like companies that have more than 3 times their EBITDA in debt, because that might show that there's a little some issues that may arise. Again, just my personal preference. When it comes to dividend, they had a monstrous hike from 2021 to 2022. It's like 50% or something, just bonkers like that. But besides that, a nice little track record of some pretty decent hikes here and there. Shares outstanding, they do buy back their shares pretty consistently at a rate about 2 to 3% year over year. And I like that because that means you're getting a bigger and bigger piece of the pie. And the return on capital employed is beautiful. 2019, 18%. 2020 was 18%. So that's just to show you the resilience of this company. 2021, 22.9. 2023, 23.47. So growing. Love that. The only issue I really have with it is the CapEx is growing as well pretty rapidly. If you look here at Texas Roadhouse, it's slowly going up, but it's not like this rapid boom from 21 2022. And next up we got Hasbro's Entertainment. This is a doozy. I don't like what I see here, and I will show you why I do not like what I see here. Take a look here at the quarterly. Negative EPS, negative income. Yeah, they've got some cash flow, not all that much, and they are having to issue out shares almost quarter over quarter. It looks like they're issuing out just a little bit more shares, and the return on capital employed is negative. The last time I seen something that looked similar to this was with Bed Bath & Beyond, and as you've seen here, it started off as just a little bit, starting off by just a little bit, and then it just everything went to poopy doo doo, and they were having to issue out shares too like crazy. But yeah, Hasbro's, I don't personally like it. Tractor Supply, Texas Roadhouse, big thumbs up from me. Again, hoping you enjoyed that. Make sure to hit that subscribe button, hit the like button, hit the bell, and if you got any stock recommendations, let me know down below and you might appear in a video. And until next time, take care. See yins.